And joining us next with some analysis of the ongoing tariff situation is Alex Capri, Senior Lecturer at the NUS Business School. Alex, thanks so much for joining us. So let's start with some of the broader numbers. How do Asia's trade deals look so far? I mean, are they, at first glance, good deals, or are they simply, we'll take it because it's better than nothing?
Look, I don't think anything that raises duty rates over the previous norm substantially, as you pointed out on your graphics, for many countries, and for countries that have been longtime trading partners of the U.S., I don't think that that's a good thing, from a trading perspective. I think what's evident here, though, is that tariffs now have been subsumed into broader geopolitical context, if you will. Right, so we see in the case of Canada, we see that Canada's assertion that they would support a Palestinian state had immediate repercussions, when it comes to the tariff rates that they get. We see that also in the deal that we keep using this term deal, and I don't really like that term, right, because it's so nebulous, but the deals that Thailand got, for example, because potentially it could have been higher if they had not come to a ceasefire. That's a geopolitical issue, and so on. India, they're buying energy from Russia. They're buying Russian armaments. That factored into the tariff. So this is really becoming muddled.
Can you expand on that thought? What is the story behind these numbers in this part of the world? The Philippines, Indonesia, 19%, 19 as well for Malaysia, Cambodia, Thailand, Vietnam, 20%, and Laos, Myanmar, 40%. What does this tell us about President Trump's strategy in this region?
Well, I think a couple of things. Smaller countries with smaller economies and higher dependence on exports to the United States are really going to get slammed and have been slammed, right, in this very asymmetric kind of structure of negotiation with Washington. I think another thing to consider with Southeast Asian countries in particular is this so-called Chinese tariff wall, right? This idea that as we saw with Vietnam, now with Malaysia at 19%, and potentially with Thailand, if they become transshipment points for Chinese materials, components, and goods, even as Chinese operations and supply chains shift out of China to those locations, Washington is looking to sort of check that strategy and apply higher tariffs to these countries. So again, an indirect kind of strategy because they're dealing with China, even when they're dealing with tariff rates for Southeast Asia.
Right. So, Alex, is there a solution for them? Because obviously this is going to have an impact for a country like Malaysia, which has long had not just Chinese companies based there, but also international companies alongside those other Southeast Asian countries you mentioned as well. Is there an immediate solution, or are we looking at a potentially big, I guess, impact on their respective GDPs and economies?
If the tariffs hold, then yes, of course, there will be impacts directly upon consumers, right? And of course, remember that we're talking about a lot of American companies in Southeast Asia with manufacturing operations that are sending parts and components into the United States. Certainly, that's the case with Mexico. So if those parts are then subject to additional duties, then costs go up all around. Now, I think this nature of this term deals, right? To me, it still is very ambiguous, and I have to question how long the deal will stick, whether there will be changes, whether there will be carve-outs, whether this is subject to ongoing negotiations involving impacted parties like multinational corporations that then will go and lobby to have these tariffs removed or diminished. So I don't think these deals, which really are almost press press releases, they're reached so quickly. I don't think that these deals are necessarily going to stick, for better or for worse, but I do think this is an ongoing process.
Yeah, still lots of things to watch out for after that August 1st deadline. And one thing I want to talk about now is sectoral tariffs, right? The steel, electronics, pharmaceuticals. So while these reciprocal tariff rates might be relatively low for some countries in Asia now, Alex, high sectoral tariffs, couldn't they really hurt?
They could. And again, if we look at the rationale behind the different kinds of tariffs, almost inevitably this talk about national security, economic security comes up. This is from the Trump perspective. So when we look at things like pharmaceuticals, semiconductors, there's a Section 232 review of semiconductors ongoing right now, which ties trade with other countries to U.S. national security issues. That's ongoing now, so we could see further developments along those lines. So we've got this hodgepodge of all these different tariffs swirling around us, and yes, they will all have potentially big impacts on how companies redistribute their supply chains, right? How they reshore supply chains. How they look for diversified supply chains, and how in some cases, I think, we're going to be seeing a kind of, world -1, right, when it comes to the U.S., if possible, if tariffs remain, very onerous and very high.
Alex, we are running out of time, but a very quick question. One thing we've seen, I've noticed, is that Asia's largest economies have committed to investing, considerable sums in the U.S., something which the smaller nations might not be able to do. Is it clear what they had to promise in order to get these framework agreements in place, the smaller ASEAN nations, for example?
Yeah, look, anything that contributes to the strategic base, the military-industrial base around manufacturing in the United States, shipbuilding, semiconductors, other critical infrastructure type things. Yes, if you've got the money that you can wave around to at least entice the United States, or at least push the negotiation process along, get another truce, such as the Chinese. So China's in a very strong position because of their control of rare earth and critical minerals. And they've managed to get concessions from Washington around semiconductors, and they've managed to push the negotiation process back. So yes, clearly having money, having a big sovereign wealth fund, for example, that might then commit to investing in these strategic areas in the United States is going to buy a lot of influence and is going to have a big effect on tariff negotiations.
Always good having you on the program, Alex. Alex Capri there, senior lecturer at NUS Business School.